All right, what's going on, guys? So, Terry James, your mortgage guy, coming to you. Just wanted to talk about today. We are going to be talking about ARM mortgages. What is ARM mortgage? No, it's not that. All right, so when we talk about ARM mortgages, what is it? Why is it becoming a trend now? And some of the ways to take benefits of it, some of the ways that we can take advantage of it. And especially now with interest rates rising, why you can look at an ARM mortgage and what you need to know about it. All right. So as we get into it, we're looking at what is an ARM mortgage. It is exactly that. It's an ARM. So what is it? What does that mean? It's an adjustable rate mortgage, ARM, ARM. So adjustable rate mortgage. And then just looking at that and you say, okay, well, what is that? All that simply means is that your rate can change after a certain period. And so for years, everyone has been comfortable with the 30-year fix program. Everyone wants 30-year fix, 30-year fix, 30-year fix. And I'm going to talk about some of the benefits of the ARM and why you want to look at that and why you may actually think about doing one of those. And so when you look at an ARM, we're looking at something that can change. Your rate can change. It typically starts with the ARM. You're typically going to start either should be a lower rate than a fix. And then the payments, of course, if your rate is lower, your payments should be lower. All right. So you should get a lower rate and a lower payment than a 30-year fix option. Okay. And so with some of the ARMs that are out there, the most popular ones are going to be a 5-1 ARM. Okay. A 7-1 ARM and a 10-1 ARM. So what those are is essentially that your adjustable rate period before it adjusts is going to be 5 years, or 7 or 10. That one, if you're looking at those 5-1, 7-1, or 10-1, what that means is that your rate isn't going to be adjusting, every 2 months or every 6 months. If you get on a 5-1 or a 7-1, there are some ARMs that will adjust every 6 months. But I'm specifically talking about 5-1 ARMs, 7-1 ARMs, 10-1 ARMs. Okay, so what that means is that after the 5-year, 7-year, 10-year period, after that period of being fixed, you are now going to come into the adjustable part of that mortgage. And what that means is that every year your mortgage rate can adjust. And so depending on where the rates are, depending on where the index is, all those factors, your rate can adjust basically once a year after that adjustment, after that fixed period. And so, the best way, looking at an ARM is almost like it's a hybrid. That's all it is. It's basically fixed for a certain period, just like your 30-year fix, and then it becomes adjustable. And so just like a hybrid car, you still have your engine, oil, all those things, but then part of it, you're running on electricity nowadays. So, but that's all the adjustable ARM is. And then from there, the main thing is, some of the benefits that you want to look at, well, why would I do an ARM? Some of the benefits on that is going to be for those that are, you purchase a home and you're looking at selling, or you're going to move, you're going to sell, that you may even refinance, within a 5, 7, 10-year period. Then why would you pay a higher rate, higher payment for on a 30-year if you're going to be doing these things? So that's the benefit of it. Some of the cons to a ARM is going to be the fact that it does adjust. There is some uncertainty because you don't know where the rates are going to be in that 5, 7, 10-year period. But the good thing is that no matter where the rates are, you have that 5, you have a 7 or 10-year period, whichever one you choose. You have that time and you can always refinance any time within that period to take advantage of the rates at that time. So those are some of the benefits, of why you might want to think ARM, especially now. One of the things that where the rates are now, we're looking at, close to 5%, 5.25%. And then by the end of the year, this year, they may even be up to, 6%. So when you're looking in that, when you're looking at the marketplace and where it is, you may want to consider an ARM because At some point, you know, the rates are going to go back down. We don't know how far, we don't know when. But if you know, get into a 5-year period, you can watch the market, wait until the rates go back down, and then look to get on a fixed rate once the rates are lower. So that's another option. That's one of the benefits that you pretty much can do at that point. And so, you know, like I said, it's very simple to explain, but I know a lot of people through the years have gotten bad, you know, bad things from them, bad information. And, but these are advantages and programs that you can take advantage of with the ARM. So it's nothing more than a hybrid loan, essentially. It's an adjustable rate mortgage. And it gives you that period, especially for those who are buying houses, you're purchasing, and you know that you don't plan to stay in this house long. So if that's your goal and that's your plan, then you definitely want to look at doing an adjustable rate mortgage opposed to a 30-year fix to take advantage of the lower rates and the lower payments. All right. So once again, if you have any questions, make sure you hit subscribe, like, so that you get all the updates on my channel, any videos I upload. And then if you have any questions, make sure you go in the comments, DM, send a message. But until next time, hope you enjoy.